Hello and welcome to Mish's Market Minute Advantage and Mish's Daily, a video. So a little secret here, earlier today or not so much earlier today, I created a video for the premium members of Mish's Market Minute Advantage. I'm filling in for Mish this week, as you all should know. I wrote the commentary yesterday. Keith and I'll be writing the commentary this week and into next week as Mish takes some time off. Well, I pretty much messed up and had no audio on the video. So rather than have everything be really late, I decided I'll do a slightly different thing today. So I'm going to give you, the Advantage customer, the video that you always get. It will start with the market analysis, and then I'll cut into the trades as Mish usually does. And for the daily, your daily is going to be market analysis in terms of the video. I'm going to cut out the trade stuff, but if you do want to get the trades, you could sign up for Mish's Market Minute Advantage. So there's a quick commercial for that. In the meantime, let's get going, and I hope you like the new format, or I should say the different format. It's not going to be what we do going forward, but it will enable me to get the content that you usually get in a more timely way, and it'll just be in a video form. All right, so I guess I have to start by explaining that I look at the markets a little bit differently, my process a little bit different than Mish, and I'm going to really focus on the daily chart. She's really good at looking at the monthly charts. I'm not going to say I ignore them, but for this analysis, I'm going to focus in on the dailies. And I think that we've got a situation in the markets that's pretty easy to define to keep us on the right side. And I also have a premise for what I'm looking for to keep me on the bullish side of the market and know when I want to turn bearish just by looking at these four charts. Now we'll go into the modern family in a second, but I'm going to start with the SPYs on the upper right-hand corner, upper left, the Qs in the upper right, the diamonds in the lower left, and IWMs in the lower right. Now what we want to see is 3 of the 4 doing the same thing. And then we can be more convinced that whatever that is the way it should go. Now, sometimes 2 out of 4 is good enough, and sometimes you got to just follow the strongest one and make sure the others don't fall behind. But right now we have a scenario where I think it pretty much lays out the template for what I want to look for in a bullish market to continue, and that is the Qs took off in mid-April and just kept running, right? Now, we can't expect the Qs to keep going like this forever, and they haven't been able to really get the rest of the market to follow them convincingly. So the next leg of what I'm looking for is the next leg of the bull market to be led by somebody other than the Qs. If the Qs continue to go, that's fine. I'm not going to try and pick a top. But what would be more encouraging would be if either the SPYs or the IWMs pick up the ball and run with it. Now, it's not that I don't like the Dow, but if the Dow is what is leading the market higher, 30 stocks, doesn't lend a lot of confidence to me. So I want the Dow it's better if the Dow participates, but I'm not going to look for it to be the leader. All right, so if I'm bullish, I want to stay on the bullish side, and I will become more bullish if the SPYs break out and continue to grind their way higher, much like the Qs do. If they do that and the Qs start to consolidate, no problem, all right? I would like, however, if the SPYs break out and continue, to see IWM break out and continue higher as well. So that's the bullish case. That's what I'd be looking for. Now, am I predicting that? No. But that is what I see as the situation where I can check the box, okay, things are really still in gear here and we're in good shape. Right now, the market's trying to figure out whether or not it's going to break out and go higher. So when do we say, you know what, the market's beginning to roll over? Well, when the SPYs break below this consolidation, it becomes a problem. That's when we start to turn a little bit cautious and we turn more cautious if we break under the 50-day moving average here and go into a warning phase. Same thing is true with IWM. If IWM closes under 137 and then continues to move lower, that's the indication, for me anyway, that we need to take a cautious stance. For the Qs, when do the Qs really start to take a break? The Qs start to take a break when they close under the 10-day moving average, which is this magenta line, and then continue to move lower. Now, if the Qs do that, as I was just saying, I don't think it's a huge negative so long as you don't get the breakdown over here in the SPYs below this level and the IWM breakdown on this level, right? So if the Qs break their 10 and continue, and the other two break their levels of support that I've drawn here, then we start to worry about the downside. Now, it doesn't mean we start to worry about a crash, but it definitely means we're going to take a more defensive position. All right, so that's the markets kind of in a nutshell. And let's take a look at now the modern family to see whether or not that supports it or doesn't support it. And to jump ahead, it pretty much does support the fact that the markets are undecided right now. They're definitely split. So the Qs, which have been strong, are powered by the SMHs here. The SMHs, as you can see, are just accelerating to the upside. Just incredible strength here. This is a daily chart. And while I wouldn't be a buyer up here, you can't argue with this trend. A pullback in a trend like this is one to be looking to be a buyer. I never am going to try and call a blow off top, even though this really does look like it's getting a little bit out of hand. So there's your strength. The SMH is your strength. Can't argue with that. Your weakness is still in the XRT, right? Retail. But I think if you step back and take a bigger look at the XRT, XRT is really just kind of stuck between 44 and change and 41. It broke the 200, which is obviously a big institutional level, and immediately fell apart. But it fell apart because a slew of negative earnings came out. So it was really primed at the top of a range, top of an important range. Negative news, what does it do? It goes down towards the bottom of the range. So until XRT breaks down through this 41 and continues lower, I think it's just stuck in a range. But that said, this is not good action for support of the bull market to go higher, right? It's easy to argue if XRT retail is not doing well, then that's not good for a bull market, no doubt. But big picture is it's really just stuck. So whether or not that's going to hold everything back, I don't know. Is it a huge negative? It becomes a huge negative if it gets under the 41 level. Now, if we look at the transportation, which got off to a really strong phase after the election, has really gone nowhere since, right? It's gone nowhere in 2017. And to make matters worse, the 50-day moving average slope is now down, and the price action can't seem to get above it. Now, that makes it really easy for us to basically define the situation of IYT here, transportation, as this. First level of support is this line. That's basically where it's pulled back to. The level we really don't want to see it break is 160. And we can turn bullish when it takes out the 50-day moving average, confirms a bull phase again, and starts to move higher, and preferably that would be over the 165 level. So this one is kind of stuck, undecided, with the momentum of that 50-day moving average weighing on it to the downside. Now, if we take a look at KRE, same basic description that I just gave you with IYT, the transportations. The 50-day moving average momentum is down. Price action can't really get through it, but if the price action does get through it, trade over 55, top of this range, then it could look like it's back in play. In terms of holding its support, it's pretty much holding a first level of support where you'd expect it to hold. You don't want it to take out this bottom level here. All right, so I wouldn't get too crazy about trying to figure out the day-to-day squiggles on either of these. because they're really kind of stuck in a range, but the range admittedly is getting heavy. So we've got XRT kind of dragging things down, SMH trying to pull things up, and IYT and KRE unable to make their mind but getting heavy. The flip side of XRT and KRE is IBB, the drugs. So the drugs, while they're not breaking out and they're not in huge, a powerful bull phase, they are back in the bull phase, and the bull phase does have some good momentum to the upside. And the big picture with IBB is this base that has been forming now for 18 months. So the 18-month base, you're up near the top of it, and it's trying to push its way higher. So you've got the SPYs trying to push higher and the drugs trying to push higher. So I would keep a close eye on IBB to see if it is going to break higher. And in fact, we're going to talk about some, one of the trades is going to be drug ETF related when I get to those towards the end of this video. All right, so the key to watch here, short term with IBB, is it just says confirmed bull phase here, right? 2 closes over the 50, and we want to see if it can hold that 50. Big picture is it really shouldn't come back down below these levels, and we'll see how it acts if it gets up to this 300. So I'd look for the IBB to be the part of the modern family that turns more positive first, but as I said, transportation and KRE could change quickly, but they do need to do it, and they aren't really looking like they aren't looking very happy right now. Now that brings us to IWM, either the sum of it all or the leader of it all, depending on how you want to look at it, which has a really nice tight consolidation for the whole year. Now, it might not be nice if you've been waiting for it to break out, but if you just look at it from a fresh perspective, just found this chart here, I'd say it looks stacked with potential and really tight risk. The potential is that it did try to break out. It pulled back. You could argue that the breakout failed, but I would say that the breakout just settled into its kind of lower area that you'd expect the support, and now it's consolidated for 2, almost 3 weeks. So a breakout of this consolidation, all right? So this consolidation in here right on support, pulling back from an attempt to break out, is incredibly bullish if it can break out and go to the upside. All right, so IWM, whichever way this thing breaks, to the upside, it could be extremely bullish. To the downside, I don't want to say it would be extremely bearish, because the next stop, I would just look for it, see how it holds around 134. But definitely, if it breaks below 137 and continues lower, then I would be cautious and kind of have to wait to see how the bulls handle it. All right, so in a nutshell, IWM is definitely the key to watch here, but drugs may offer some opportunity, and kind of the confirmation of a move to the upside would be if the bulls could get the IYTs and the KREs to get going, right? So if IWM breaks out and you don't have KREs and IYT and IBB supporting it, maybe I'd be a little hesitant. If they're all breaking out, then I'd be really happy. As for XRT, quite frankly, that thing can do whatever it wants. It's stuck in the swamp until it gets over 44. I wouldn't let it drag me down, but like I said, I wouldn't worry about XRT until it either gets over 44 or under 41. All right, so for Mish's Daily, that's the summary for today for MMM Advantage. Stick around and let's take a look at some trade ideas for the week.